Some days we keep on rolling. And some days we wanna fold in. And you wanna cash out, and you wanna double down. Real talk, real numbers, real life.
Welcome back to Inspired or Acquired. This is a podcast where we interview real business owners, talk real numbers, and ask them whether or not they would sell. So we've got the Sultan of Storage coming from Colorado, as he used to be nicknamed on Twitter. Baird Kleinsmith is a pretty amazing entrepreneur who's built up a really nice portfolio of self-storage businesses. And he also has a recruiting and staffing business as well, which we'll hear more about. So Baird, how are you? It's good to see you.
Yeah, I'm doing great. Great to see you guys too.
Yeah. And as always, I'm joined by my co-host, the business broker out of Texas, Clint Fiore. So Clint, how you doing?
Doing great. Glad to be here. Glad to be with Baird. I've been following him for a while and was excited to meet.
Yeah, it's going to be a fun one. So Baird, if you don't mind, maybe tell us a little bit about the business of, who your customers are and what you do. And then we'll have Clint jump into the valuation.
Yeah, we got a 2-for-1 special today, people. So Baird, let's tackle them one at a time, and let's start with the portfolio. Let's start with the self-storage because you've been doing that one longer. Tell us where that's at. Kind of how long have you been doing the self-storage portfolio, and where's it at today?
Yeah, storage and staffing. I'll start with storage. So, I've told my story pretty frequently on Twitter, but I was a longtime corporate employee. I was a business development leader for a couple of fintech firms, and that took me over to London from 2017 through most of 2020. Actually, I'm right on my 4-year anniversary of moving back from the UK. But when I got back in August of 2020, I didn't know what I wanted to do with my professional life. I did know that I didn't want to continue in the corporate track that I was on. And I got really interested in buying a small business when I was back in the UK. I listened to a couple of podcasts. I read the Harvard Business Review book on buying a small business. I read Buy Then Build, and came back to Durango, Colorado, where I live, and started looking for businesses that were for sale, and nothing inspired me. I couldn't see myself operating a service business, which was what most was on it. I was on Biz Buy Sell, browsing listings there, and nothing inspired me. Even looked at like internet businesses, and then I heard Nick Huber on the My First Million podcast back in November of 2020, and he described his strategy of buying sort of mom and pop storage facilities. And I thought, oh man, I could do that. Doesn't sound operationally complex. I see all these crappy mom and pop storage facilities around me. Let's do that. And I went for it, and I bought my first property in February of 2021, and went on to buy 9 more. So I've bought 10. The most recent was purchased in October of 23 last year. And in order to buy that, I sold one. I sold my first property that I had bought in February 21, sold it in, actually did a reverse 1031 exchange. So I bought the replacement property first, and then 2 months later, sold the relinquished property. And I made about a $900,000 gain on the sale of that first property, and just rolled that directly into the purchase of that 10th property, which was it was a $12 million purchase. So I bought the first property for 1.1 million, sold it for 2, and then I bought this this 10th property for 12 million. It was a pretty big deal.
Wow! So that was real recently. You landed the big one.
Yeah. I'm about, I'm 8 months into, or I guess 9 months into owning the one. It was a huge bet. I mean, I've written about this on Twitter, but it's a beautiful property. Like physically, it's amazing. It's here where I live in Durango, 115,000 square feet, sits up on a hillside over the river. It's a it's a very prominent property. Like when you drive into town, you see it up on the hill. But operationally, it was a disaster. The prior owner was driving, I think, like 650,000 in annual revenue, 350,000 in net income, and to pay $12 million for something like that, you better see a very clear upside. And the upside was clear to me, but nonetheless, it was a huge risk, and I was super lucky to get my bank on board with lending me about half the money I needed to buy it.
Cool. So you did your money from the other property, and then half from the bank. Where'd the rest of it come from? Did you raise some money?
The seller financed $5 million.
Okay.
And my bank financed $6 million, and I brought about $1 million. So
okay, so you own them yourself with no partners.
Yeah, I don't. I don't know if I'm unique, but I don't work with investor capital. I only use my capital. When I was in my corporate career, I always had my eye on the end, and I was on the FIRE track, the financial independence, retire early. And when I came back to Durango, I didn't have enough money to retire early, so let's go and figure out creative ways to put that money to work and build an income that way, so I don't have to pay retirement.
Super cool, man. So, all right, let's just sum it up. This all happened really fast. This has just been a few years.
It's crazy how fast you got that snowball cranking.
Freaking Nick Huber podcast gets you inspired, and you went out and took massive action. So kudos to you, man. Not having to reinvent the wheel, just hear something that works and go do it.
Yeah.
So here you are a few years in, 10 properties. Give me an idea on what you think realistically, not optimistically, the valuation of this portfolio is today, and what your equity versus debt position is.
Yeah. So realistically, and you'll see my eyes going this way because 9 properties, there's a lot of numbers, but I've got a spreadsheet that I shared with you guys with all this info. It'll be my cheat sheet. But I ran the numbers. My last 12 months of revenue, or I guess my what did I look at? I'm just looking at the sheet because one of them, the challenge is that the property that I bought in October hasn't fully seasoned. I've only got 8 months of data, but actually in this sheet, I annualize those numbers. So I think the current value of the portfolio is around $28 million. That uses my last 12-month net operating income number, and then I used 8% cap rate for my 8 of the 9 properties. And then for the large property, I used a 7% cap rate. I think that one's more of like an institutional quality asset that would demand a lower cap rate. So yeah, at 7% cap rate on that one and then 8% on the rest, it's right around 28 million. My debt on the properties today is 17.5 million. And so I figure I've got about just north of 10 million in equity today on the portfolio as a whole.
Hey guys, wanted to take a quick break from the show just to tell you about our companies for a second. I'm Patrick Dichter, and I own Appletree Business Services. We do quality accounting and tax nationwide. So if you're running a business or looking to buy a business, we'd love to help you out with accounting and tax services. You can find us at appletreebusiness.com. And Clint, tell us about Bison Business.
Yeah, Bison Business is my firm. We do nationwide M&A. So we help people buy and sell companies. Most of our customers have companies in the 1 to 20 million revenue range, profitable businesses. So if you've got one and you're ready to get acquired, you can reach out to us at bisonbusiness.com for a complimentary valuation, and we can get you to market and get you sold. If you're a listener that's a buyer that wants to buy a company that size, make sure you're on our email list, because we'll send you out deals first before they hit the market anywhere else. But we'd love to serve you anytime you're thinking of acquiring or selling your business. We want to be your first stop at Bison Business.
Awesome. Now back to the show.
I'm looking at your spreadsheet. I guess this is an annualized number for NOI of 1.26 million on the big property.
Yeah, that's my, so you're looking at my next 12-month forecast. And so for that, I used my last 3 months revenue and annualized it.
Gotcha.
Yeah, I expect that one will do right around 1.26 million net operating income.
So your last 8 months NOI 731, is that annualized?
That's not. That is the actual figure from the last 8 months.
You said when you bought it in October, it was only doing what, 350 in NOI? How'd you turn that around so fast? That's more than double.
Yeah. Oh man, this is a saga of a story. So
Yeah.
I knew immediately, as soon as I saw the numbers and compared them to the rent roll, I knew something was wrong in this. The rent roll was like $105,000, meaning that like that owner, if he was collecting 100% of his rent roll, he should have been doing $105,000 a month in revenue. In fact, he should have been doing more than that with ancillary revenue. Things like admin fees, charge ship move-in, late fees, insurance revenue. He should have been doing. He should have been doing probably closer to 1.3 million a year in revenue, but he was doing 650. So I just, when I look at a property, I sort of take what the current owner is doing and I throw it in the trash or I throw it to the side. And I really look at, if I were to own this property, considering the unit mix that they have and the prices that I think I can charge, what can I generate in revenue and net operating? And for costs, again, like I don't care what the prior owner's costs are. I know what it takes for me to run a property like this. In this case, like I had never run a property of this size, so I had to make some guesses. And I try to be conservative there. I estimate my costs, and I ran those numbers, and I thought, wow, paying $12 million for this thing would be way overpaying. That was his number. That's what he needed to move. He was an unreasonable seller. But he was lucky to find an unreasonable buyer in me.
Yeah.
So I ran my numbers and I thought, man, this thing could cash flow, like with the debt terms that I think I can get. This thing can cash flow like a monster. And I think it can pretty quickly be worth, 16, 18, maybe $20 million in the future. So for me, it was worth it to take the risk of overpaying at 12 if I thought I could get it to 16 or 20. So we bought it the day of close. We send out that standard introduction email to who we thought were our customers, customer list provided by the prior owner's manager, who happened to be his son. And we probably got 100 emails back, people telling us, I don't have a storage unit with you. Why are you emailing me? Take you off the list. So I knew, I had just personally guaranteed $11 million of debt. Excuse the language, but I crapped my pants. I was like, what did I buy here? And so long story short, we ended up just playing this like giant game of whack-a-mole, trying to figure out who's in these units. Like the property was 100% physically occupied. There was a lock on just about every one of the 776 units.
Holy cow.
But we didn't know who was in them. Like, people were telling me.
You just had no idea. Like their records were so bad. I'd say about half the customer records were accurate, but the other half were not. That's hundreds.
So we had people coming back to us telling us we had their unit numbers wrong. We had other people assigned to those units. So we thought, well, if Sally isn't in unit A 217, who is in? Or if Sally is saying she's in A 217, but we have Joe in that. Like, where's Joe? Like, what unit does Joe have? And so we ended up cutting locks off of 200 units just to go into them to try to find identifying information. In many cases, we were able to do that, track down people that thought their units had been sold years ago, and let them come and empty them out and take their stuff. We ended up auctioning like 50 units that were full of clearly abandoned items, like they were sitting under a decade of dust, hadn't been accessed, clearly hadn't been accessed in years, didn't contain anything of like emotional or financial value, significant. So we made the decision to auction those, even though we didn't know whose stuff they were. And I think so we bought it at like, what we thought was close to 100% occupancy. And we dropped down to 72% occupancy in February, just through all that clean out. And now thankfully we're back up to, I think right now we're at 94%. So, and it's generating $130,000 a month in revenue now, just 8 months later.
Wow. That story confirms you belong on this show.
And you know what? Like, yeah, it sucked while we were going through some of it. I lost some sleep, but man, the satisfaction of taking something like that was just so poorly run and fixing it up and making it it is a smooth running operation now. And here's the crazy thing is that, the manager who was managing it, who caused all these issues, it wasn't a situation of fraud. It was a situation of just complete negligence, like mind-boggling negligence. It's a case study in how things can go wrong if you give a child a job. But he was in the office. He's a full-time manager in the office of this giant property. We've replaced him with a remote team that's based in Latin America. There's nobody in the office now. We have an on-site maintenance manager that does all the physical stuff. He's not customer facing. And so now we've, like, with a remote team, no face-to-face customer service, we've got an operation that is 100 times smoother than what it was before.
Yeah. So the reason I was saying that is, like, this show is a business owner show for entrepreneurs, where we're talking about their numbers and if they would sell or not. And I can almost hear somebody in our audience thinking, why is this guy on there? This is a real estate guy, not a business guy.
Yeah.
And but you know what? Like, your story of this acquisition proves you're a business guy, and you're a guy after our heart here. And so I did some back of the napkin math while you were talking, and I was looking at your spreadsheet with your data. And I mean, if any real estate people are listening, if they had just seen the numbers of that facility, they would think you're the biggest idiot on the planet. Like, that would mean you bought it at around a 3 cap, like, of what it was to get that guy his $12 million. But you weren't buying it like a real estate investor, and where you're just kind of playing the game of cap rates and interest rates and all that. You see the potential here, but it's going to take some sweat. It's going to take some hard work to kind of sort it out and get it functioning properly. And yeah, I mean, it's neat because I feel like, I told stories on one of our previous shows about how I feel like there's some unethical real estate folks that will try to just take advantage of people, pay less than something's worth and make their money on the buy. But, like, anybody that's worth their salt in commercial real estate would agree you overpaid, but yet you're still able to get a valuation that's probably $6 million more than what you paid ish within the next year, by just fixing this thing. And that just goes to show you this self-storage isn't really it's in that gray area between, is it real estate or is it a business? And people that think of it like a business can swing that delta to get that $6 million swing by respecting it and treating it like a business. Do you not have any idea what the story was with his owner and why he put up with such negligence and incompetence? Was he just checked out, or?
Yeah, to be honest, he was a builder. Like he loved building buildings.
Mm-hmm.
He wasn't a business person, and he's aged, and didn't know the questions to ask his manager. He didn't know the reports to look at. He knew something was wrong, but he just didn't know what was wrong. He suspected some nefarious activity, but it wasn't that. It was just pure. Somebody got in over their head. They lost control, and that snowballed. But yeah, I appreciate the acknowledgement that that I am a small business owner and operator, because I do sometimes feel like I'm an outsider in the SMB community. But you're right. I describe it as storage is it's an SMB that's tied to a real estate asset. And I get all the tax advantages and the debt advantages of a real estate asset, but I rarely make significant physical improvements to my properties. Don't depend on cap rate compression for appreciation of the property. In fact, you look at the cap rates I've paid in almost every case, with the exception of one I bought it in A cap. And so, the cap rates of, I assume my exit cap rate would be the same as my entrance cap rate. Any value gained in that one has been purely through increasing net operating income. But yeah, our value is added not through physical improvements. It's through operational improvements, implementing technology, implementing an amazing customer service team and the processes behind that team. And then financial controls, like controlling costs, and making the right investments, adjusting our pricing to the market. We're not, in some cases I've bought properties and immediately made like a drastic rent increase because they were so far below market. But in many cases we're just optimizing revenue gradually over time. And I think that shows in my occupancy. Like my properties are 92. I have one that's 100% full right now. I don't have anything that's less than 90% full. Whereas if I had come in and just jacked rates up and been okay with watching my occupancy fall and enduring the endless customer complaints like that, I think I might be in a position now. So I've sort of I'm taking a pretty conservative approach to managing revenue.
Great. I think the other lesson here is you were able to take that big swing because you had success with smaller reps, and I know like the Harvard Business Book Guide and a lot of other people say buy as big as you can, but there's something to be said for, buying smaller initially and like figuring things out before you take the bigger swing. So
yeah, absolutely. And it also, it gave me the experience and the confidence to know that I could execute. There's always some uncertainty when you're jumping from, buying 20, 30,000 square foot facilities to 115,000 square feet. There's certainly some doubt as to whether or not the playbook will apply. But the other benefit to building that track record with smaller bets was that it gave me the ability to show my lender that I do what I say. When I present it to them, I'm not allowed in loan committee, but I spoon feed them the story that they can take into loan committee. I broke it down like very specifically. I gave them the pro forma P&L for my prior 9 purchases. I gave my pro forma P&L for what I told them and my other lenders, because they weren't my only lender, but I gave them what I said I would do with the properties compared to what the properties actually did. And in 8 out of 9 cases, my actual performance exceeded my pro forma estimates. There was one that was just slightly off. And I think that was pretty key in getting them to take that bet with me.
That's awesome. That's impressive. And then along the way, you've built this other company. So tell us about the other company that you've started.
Yeah. So the operations of the self-storage business has gone through a bunch of iterations in terms of like who I had managing them. At one point, I was managing them directly. At one point, my sister-in-law was managing them. But I decided a few years back to try to go offshore, and initially tried hiring some folks in the Philippines as customer service reps. That didn't work out because of the time difference, and so that led me to Latin America. And so I went to not physically, but I went to Latin America to look for some customer service reps, and hired 2 folks in Venezuela who are still with me today. One of them is my operations manager who really runs the storage business, and the other is a customer service rep. And but through that process, I directly searched. Like I posted on job boards, interviewed candidates, and it was really hard. It was hard to find great people. And I got really lucky in finding two great folks. And through that, I realized, man, there's this huge opportunity to open up Latin America as a go-to geography for remote workers working for U.S. and Canadian businesses. And so I tracked down who's now my co-founder, Ed Rodriguez. Found him on Twitter, and we decided to start HireLATAM together. We started in April of last year, and it's gone great. We've got 25 people in Latin America. I guess 23 in Latin America, and they're both in the States. He's in St. Louis. I'm in Durango, and that business has its ups and downs. It seems like that's sort of the gold rush right now. Everybody and their mothers trying to start an offshore, nearshore recruiting business. I'm here to tell you, it is not as easy as it looks. Go for it if you want to do it, but it's not easy money. But it's a great business. For me, it's I get a lot of satisfaction in how we're helping people. You should see, like we've launched recently that we're doing free placements for anybody in our talent pool from Venezuela, and then we're offering some additional resources to Venezuelans specifically because we know they're going through such a challenging time right now. And you should see the gratitude that we get from them, even if we don't place a whole lot of people from Venezuela. Just the show of support is so appreciated. And so that business is, I guess hopefully at some point it'll be very financial rewarding, but right now it's rewarding in other ways.
Well, it seems to be getting some traction. I mean, I looked through the basics you sent us over on some data there. You're 16 months in?
Yep.
Talk us through the business by the numbers, maybe like on a trailing 12 basis. How are things looking?
Yeah. So in the last 12 months, we've done about 900,000 in revenue. We've been profitable from the start. And we, in the last 12 months, we've generated about 240,000 in net income, including any salaries that Ed and I are taking. So you 24%, I guess a little north of that. What's 25% net income margins? Honestly, I don't know how that compares to other recruiting firms. I'm guessing it's lower than most because we are in growth mode. We're investing a lot of our cash into growing the business, and it's up and down each month. Like we might do 40 placements one month, and then drop down to 30 placements another, and then pop back up. It's it's not as predictable. It is it's an upfront revenue business where we charge $2,900 a flat fee when we successfully place someone. One of the challenges in that business is we've tried to reduce the barriers to businesses exploring hiring in Latin America, and so we don't take a deposit up front. We don't charge our fee until we actually make a placement. Somebody actually hires the candidate, and so with that, we end up with a lot of folks that go through the process and then don't end up hiring someone, and we don't realize revenue there. But there is benefit to that in that we're building this big pre-vetted talent, and ideally in the future, when a business owner comes to us interested in hiring a certain role in Latin America, we can go into that pre-vetted talent database and, like, even on that first call with the client, present to them 3 profiles of candidates that we've already taken through that whole process, and they just weren't selected by a client.
Does it feel pretty good that you're employing 23 people in Latin America, and you've helped about over 300 get jobs in the last 12 months alone? Is that pretty good?
Yeah, absolutely. It feels great. You've got some people that say that we're taking jobs from Americans, but to be honest, like it's hard. It's hard to find people in America right now. Yeah. I don't see that changing anytime soon. Even if unemployment goes up like we want to, it's still going to be challenging to find great people here. And we've just got this huge group of really hungry, hardworking, educated Latin Americans that just want a chance. and they don't have opportunities locally that match those opportunities that we can help find for them in the US, Canada, and beyond. And so, yeah, it does feel really good. We built a great culture in that business. I love the Latin American people. We've got a team that's like 5% female. And man, like our team call, it's full of a bunch of Latinas, one gringo and me, and then a couple of Latinos. They're really fun. Like we had our team call yesterday, and every once in a while we do like an icebreaker, like team building event. Yesterday we used this website called Time Guesser, which is one of those where it shows you a picture and you have to guess the date, like the year and the location. And so we did that as a team, as sort of a team competition, and it was pretty fun. We'll do things like people present their favorite food. We've done a bunch of exercises there. It's a super fun team, really hardworking, but really fun.
Well, I'll give you a quick plug here. We ended up, I think last year we were trying to hire for a pretty specialized role in our accounting firm. And I tried to do it on my own at first, and it was like crickets on Indeed. And then talked to Gabby and your team, and we ultimately ended up not making the hire at all. But the candidates that we got and just interacting with your team, they were awesome. And so we'll probably revisit that. But we were kind of looking for like a little bit of a accounting unicorn, and they presented some amazing talent. And then we held off on the hire, but it was it was night and day, like having that help versus like the results that I got on my own on the first try. So
yeah, and I see like that, even though we didn't end up like placing somebody with you, I see it as a win, because I think it probably changed your perception a bit as to
totally,
what the level of talent is that can be found in Latin America. And then it, through that, we found some really qualified people in accounting and bookkeeping that, I'm guessing we've probably placed since then in other roles.
Yeah. What's the vision here, man? You've got this storage portfolio that, might be worth 28 million. You've got this, new company that you bootstrapped and is profitable. Where do you want to take these things in the next few years?
Yeah. So on the storage side, I'm really comfortable there. I'm not in the same growth mode that I have been in for the last few years. In fact, I get a little bit of FOMO when I see people talking about closing deals, because I think this will be the first year in the last 4 that I won't buy a property. But I'm okay with that. It's generating amazing cash flow. I've got a group of really well-run, stabilized assets. I think there I'm going to continue to try to do what I did last year, which is trade up a property that maybe is outside of the geographic footprint that I'm focused on, and trade it up for larger assets or even similarly sized assets that are more in my geographic area. I think the goal there is to just build a geographically concentrated group of really well-run, like the best run storage facilities in Southern Colorado. And I don't know, maybe in the future I sell that to an institutional buyer, cash out, and ride it into the sunset. But to be honest, like I really enjoy that business. It's fairly hands off for me today. I get to step in when I want to or need to. And so I think just like kind of optimizing that profile, that portfolio, and like it's concentrating it a bit would be the future for it. I'm not sure my kids want to own storage facilities, so I don't know if they're going to wait until I die to sell them. I think at some point I'll probably want to cash out. I don't know who I saw tweet this, but somebody said, it's really hard to get any income stream fully passive if you're an owner. And I agree with that. Like there's always going to be something breaking, something going wrong, something needing my attention, no matter how well I've set up a team to manage it. So maybe at some point I get tired of that. And then for HireLATAM, and I see a ton of potential there. I think we're just scratching the surface when it comes to looking to Latin America for remote talent. Philippines is huge. That's where most people look first, but I see a lot of advantages to hiring in Latin America, and I only see it growing. I don't think Ed or I, neither Ed nor I, want to operate it long term. And so I think we will probably be looking for, in fact, I know we'll be looking for somebody else to operate it.
So what makes you tick, man? Like I hope all these people exit their businesses that are usually burned out, and they sell and they get a bag of money. And half the time they tell me, when I ask them, what are you doing next? They say, I'm thinking about buying self-storage facilities or something like that. And it sounds like you just skipped a step. You just skipped the bootstrap, the HVAC business for 30 years step, and went straight into, building a cash flowing self-storage portfolio. So I think that's really funny. So, I mean, you're kind of living the dream, you've got a cash flowing business that's relatively easy to run. And then you've got HireLATAM that is growing, and you're about to kind of delegate that and with someone that you're excited about kind of being the chief revenue officer and kind of taking that off your hands. And so this next phase for you. So let's assume that all goes successful and HireLATAM becomes not much of a burden of your time, and your storage facilities are humming, not taking a ton of your time. Like, what makes you tick at that point? Are you going to spin up some other thing? Are you just going to keep following the Huber playbook and just get a whole bunch of random other businesses? I've
already followed.
You already got two of them.
I might as well do more now.
Yeah,
I got to meet Nick in person a couple of weeks ago, and it was awesome. I got to thank him in person for how he's helped change my trajectory. It was also great to meet the man behind the Twitter account. He's a good guy. I don't know how many people believe that, but he's a really good guy, and I enjoy spending time with him.
I like him too. I've met him before. He's fun.
Yeah. So I don't know. I was actually talking to Christian Ruff this morning, who your listeners might know from Twitter, former helicopter pilot, now leadership coach. And I was actually describing for him that I do feel a little bit lost right now. Like I've achieved my goals. Like I think my storage portfolio is cash flowing twice what my big audacious goal was. And it doesn't require much of my time. HireLATAM is more involved, but doesn't require a ton of my time. I'd say I'm more of an advisor in that business, an operator, hybrid there. And so I'm pretty comfortable professionally. I'm comfortable financially. I'm trying to figure out what do I want to do professionally? And I think the answer is just do projects that will work on projects that I really enjoy. I'm having fun with. I think HireLATAM is one of those. I'm having a ton of fun with it. And we talked about sort of the social impact of it. It's something that I actually could spend more of my time on. I don't have ambitions for growth though. I'm kind of I'm pretty comfortable. But at the same time, the dilemma I was describing for Christian is that I feel pretty distracted right now, unfocused and unproductive. And I either need to just come to terms with being unproductive as a professional and being productive in other ways, or I need to figure out, what's next in terms of professional growth. Kind of think it's the former though. Just need to get comfortable with not being so productive. Just enjoy the freedom and the flexibility that.
Pick up a new hobby or something, man.
Yeah. I ride my bike a lot. I'll just ride my bike.
Yeah. No, I mean, that's a great situation. And I think, I want to put a wrap on this episode here pretty soon. But I think that just shows you you get the operations right. You get the cash flow right. You have all the options in the world, and a lot of us, are thinking, is it time for exit? Is it time not to exit? In Baird's case, it's almost like this unique situation where if I'm your buddy, we're sitting around having beers, like I'm always like, I'm a broker, right? So like, to a hammer, everything's a nail, and like I always feel like I'm pushing people to buy and sell and do transactions because I just love deals and I love doing more deals. But like you said, you kind of doubled your expectations on your big goal on your cash flow. And if we're sitting around, you might be the one guy that I'm just like, don't sell, man. Just hang out and wait for an opportunity. Like if the market ever gets super heated again or just goes absolutely bonkers and interest rates are zero and people are paying ridiculous cap rates, take advantage, if the right stars align. But in this environment, like even though you could get a big win and secure it, like why sell now? Hang out, like figure out what else is important to you and go after that for a while, and then just be opportunistic and kind of do some praying, do some soul searching, and find the next way to use your time. But I don't think your solution is in an acquisition or in a sale. It's like you've got to. That answer comes from within, and to get that answer from within, you got to create some quiet space to let yourself sit in that. And I struggle with that because I'm the type of guy that's I get all anxious if I'm not being like productive, if I'm not, and there's like a deep seated psychological thing there where you derive your value from what you do, from almost like your achievements, and then once you've achieved something, if you don't have another goal, another mountain that you're climbing, you feel lost or you feel like you're not, doing what you're supposed to be doing. And there's something I think for a season that might be worth exploring, just sitting in that and be like, am I enough? Am I valuable as I sit here without having to go prove something to somebody or do something for someone? And I think it's a great question to explore. And I think you've positioned your portfolio to where you get the time to explore that and come up with that answer. So I'm inspired from this story. I'm inspired from this conversation, especially in how quick this has all happened.
Yes.
And I hope that the listeners are inspired of like, this guy didn't know what he was going to do and was exploring all these random different ideas and has set himself up in a way that I would say he's at like this kind of dream situation for many, many people. And from starting from a totally different situation just 4 years ago. So hats off to you, Baird. I appreciate the encouragement. I appreciate the inspiration of what you're doing. And I hope that you do, find a way to find your inspiration of like, what's going to go next? What are you going to do next? And I hope people will connect with you because this is an intriguing story. I think we need to keep hearing from you and keep getting updates on where you go from here and how this unfolds. So how do people find you? How do people follow you, get in touch with you? Because I'm definitely 10 times more interested in you now that I kind of know how you got here. And I'm super curious as to where you go from here. So how do people find you?
Yeah, so find me on X, formerly known as Twitter, as @Sultan of Storage. And then connect with me on LinkedIn. I'm the only Baird Kleinsmith on LinkedIn, so pretty easy to find there. And I think I'll be posting more on that platform. So yeah, either way. And then if anybody wants to send me an email, it's baird@chainringcapital.com.
Very good.
Awesome. Thanks for coming on. We'll link to that in the show notes. And let's stay in touch.
Thanks, guys. Really enjoyed it.
See you, Baird.